Live from the Money Show in Philadelphia, I'm Adrian Manns. I'm here with Robert Kelley. And one of the things we were just talking about off camera, I'm interested in what time compressions or what time frames people trade in. So I'm a very short-term trader, but I'm interested in how you overlay the short-term and the long-term when you were looking at the wave theory.
Yeah, well that's one of the great things about the wave theory is that it applies at all time frames. It's fractal in nature. So you can see waves on a monthly chart, you can see waves on a 1 minute chart. And so the cool thing about it is when you see a wave count at multiple degrees of time frame kind of coming to a conclusion, that gives us a lot of additional confidence level in our forecast. So if you're a longer term investor, sometimes the short term analysis can help you fine tune a longer term entry or exit. So that's the great thing about Elliot is that fractal nature and zooming in.
So you're looking for confluence between the time frames?
Yeah, so for example, if you got a 5-wave rally on a daily chart coming to an end, and the hourly chart has a smaller 5-wave rally, and then you zoom into a 5 minute, you can see another 5-wave rally within that last thing ending, then that's sometimes allows you to really nail big turning points.
I get the feeling when I talk to people about Elliott Wave that it's almost like you sort of have to buy into it wholeheartedly before you even try looking.
I suppose so. I mean, when I first discovered it, which was back in '86, Robert Prechter was getting a lot of press at the time and had his book, and I lived in Georgia, which is where he is, and so I learned about it, and it just really made sense to me, the concept, and I can understand that some people don't believe in it, but I just went through a speech, in my talk here about the Fed and how the Fed cutting rates, sometimes the market keeps going down, but the conventional wisdom is, whatever the Fed's going to do, we got to apply that analysis to the market, but that doesn't work consistently. So Elliott Wave is more objective, and it's price-based, so you get the real action. If market's going up in 5 waves, then the trend is up, and forget about the negative news.
So you've embraced this throughout your entire trading career.
Yes.
Then, and you've been applying Elliott Wave consistently for the.
Yeah, I've seen it. I mean, some it doesn't work every time, every turn.
Right.
But I've seen it work at some really amazing turning points and been able to call big tops and bottoms. So, and it definitely works. It takes a while to learn the skill to do it. Of course,
right.
We hope to offer those skills, to our client base.
Yeah, your clients probably start to feel these things after.
Yeah, and just by being exposed to it, you will learn about it.
Yeah. Oh, that's great. All right, so the site is elliottwave.com.
Correct.
Okay, you're Robert Kelley.
That's right.
They'll find you there. And for the Money Show, I'm Adrian Manns, live from Philadelphia.